Oh crap, it's happening in LA and Orange County and the numbers are not pretty. Well, holy smokes, 6.6 million jobless claims in 1 week compared to 5.2 expected. We've got people rioting in jails, and of course, the stock market's having a party again, much like last week was happening. Yeah, the stock market is blowing up. In fact, the Simon Property Group that I recommended is up today over 13% alone. Cheesecake Factory, almost 10%. Carnival, 10%. Wells Fargo, almost up 10%, with JP Morgan up 6% in the lead behind. Wow, the market is going nuts again with the Dow Jones up 1.5%. But today, we're gonna talk about real estate and some new data that just came out that's gonna give us a little bit of a guide as to what's happening in the real estate space. But first, let's try to get a grasp on how many people have not paid their rent for April, because we actually have that data. The Wall Street Journal did a survey of investment grade apartments, AKA not single family houses or the small deal, AKA all the crap Grant Cardone invests in. And the Wall Street Journal found that in the first week of April, the first 7 days of April, 31% of tenants did not make any payment. Literally 31% paid zero. Not a dollar, not half their rent, zero. The other 69%, 68, 69%, they paid either in full or partially. We don't even know how much of the 69% actually made their full payment. All we know is that 31% paid zero and everybody else made either a partial payment or full payment. That's insane. 31% of investment grade apartment tenants did not pay rent in April. That will absolutely destroy any kind of multifamily syndication. At least their cash flow for the time being is all gonna get cut. Now, obviously, it's for things like this that we have now Forbearance Program set up, which I've made multiple videos about the pros and cons and how to do this correctly. But wow, this is some scary information. We don't have any data, unfortunately, on single family, but we do have data on sales, and that's where we're gonna go now. Now, just gonna make a quick note here because obviously a lot of y'all know I'm that 28-year-old real estate broker and real estate investor, and I want to say that all of my tenants have paid, all of them paid on time. Not a single tenant had any kind of rent concession, and that's just good. I mean, ultimately, all tenants will owe what they need to pay anyway, but I attribute part of this to the following reasons. I thought I'd just mention it quickly. Number one, our screening criteria is stricter than most, and that's particularly because we purposefully slightly underprice our properties so that we can attract the highest quality tenants and then sort of have our pick of the bunch. We'd rather take a lower price and have a higher quality tenant, and then that way they win by paying a little bit less, but then maybe they're overqualified. Now, sometimes people say, oh, but Kevin, aren't they gonna go buy? No problem. But at least we don't have problems in the meantime, because a tenant who wants to eventually go buy is not a tenant who wants to miss payments or get evicted. See, ultimately, to me, property management comes down to a balance between the tenant's leverage and the landlord's leverage. Every negotiation is based in leverage. If you have power, you have negotiation abilities. If you have no leverage or power, you can't negotiate. So obviously, I teach all of this in my property management course on how to build tenant leverage in the best way possible. In fact, at no cost, you can just scroll down at all of the different ways we build tenant leverage. You can click on the link down below and see that. Now let's talk about mortgage data, and then let's actually talk about what's practically happening in the real estate market and real estate market sales data that was just released. The mortgage market. CNBC indicated that combined weekly mortgage applications sank 18% as homebuyers are backing away, which makes sense. It is interesting though that we see here applications to refinance home loans fell 19%, but we're still up almost 2.5 times from a year ago. So things are like 2.5 times higher, but they've trickled down a little bit in the refinance space. However, they did mention that mortgage applications to purchase a home continued their sharp decline, falling another 12% for the week. The numbers were far worse in the hardest hit states. Keep that in mind. That's going to be very important with the new data that I have that just came out. So purchase applications fell 47% in California, 55% in New York and 59% in Washington State. We also have a report here that 44% of sellers plan to postpone their sale and 60% felt less optimistic. Let's break this down and understand this. First, let's talk about mortgage rates. Here's the quick recap on this. When this crisis started at the beginning of March, mortgage rates plummeted. Hardcore plummeted when the Fed dropped rates to 0 instantly, when they dropped rates at a surprise meeting that nobody was expecting. Treasury bonds plummeted, mortgage rates plummeted, everything fell. However, because rates fell so crazy low, everybody saw a goldmine of an opportunity to refinance their house. A lot of people who had 4% interest rates were getting quoted like 2.7% on 30-year fixed rate loans. I mean, that's like free money. That's insane. Unfortunately, because so many people applied to refinance their homes and tap into the bank that is their home to give them some more of a safety net, which, by the way, is a cool thing about owning real estate, that you actually have a tool you could tap into when you need it. Don't spend that money on like a boat or an RV though. You use it to buy some stocks. But anyway, mortgage rates shot right up to offset this sort of crazy demand. A lot of lenders stopped taking applications completely. So there's still a lot of demand for loans, especially refinancing, but some lenders just aren't taking any new business right now. And so we're starting to kind of see this little trickle back down in rates. So yeah, it's possible we'll see rates kind of continue to trend downwards, but this is crazy in terms of refinancing. But let's actually talk about sales prices and sales data. The CNBC article is actually quite interesting because back when this crisis started, I had mentioned that what we're probably going to see is, without a doubt, less buyers because, you know, a lot of buyers can't go home shopping right now. You're stuck at your current home. You're not even allowed to go out. So we knew we were going to see this decline in buyers. That makes sense. But we also thought that a lot of sellers would not want to sell because you don't want potentially sick people in your house, and the expectation that they're actually going to be buyers willing to buy in this time is going to be lower. So we thought, all right, we're going to see less sellers as well. Well, when you have less demand but also less supply, you net don't necessarily see a change in pricing. That is, they kind of wash each other out. You just remove, 50% of the market on both ends. You still got the leftover 50% going on as normal, which is kind of weird to think about, that something can continue to go on as normal. But remember, real estate is extremely sensitive, not so much to buyers and sellers, but to interest rates. See, I have a rule of 10x, and that says when interest rates go up 1%, property values fall 10%. So whatever the interest rates change, real estate prices change by a factor of 10. If interest rates fall 0.5%, property values might instantly go up by 5%. Real estate can surprisingly move really fast when it comes to interest rates. But seeing this sort of change in the amount, the volume of buyers and sellers, seeing this kind of demand actually change pricing takes many months. But there's actually something we can take out of the CNBC article that's surprisingly interesting. According to their survey in hardest hit areas, they expect there to be 47 to 55% less buyers, but only 44% less sellers expected to postpone selling. So you actually end up with a situation where you have fewer buyers than sellers, and this is where you're going to start seeing a little bit more of that net negative trend. You'll end up having more supply, less demand, and this is where you'll see a bit of more of a net negative. How much? This remains to be seen, but I've got some new data for you. Let's get into that data because that's mind-blowing. By the way, remember I'm live every single day. The market is open at 9 a.m., so make sure to use those links down below. Use that coupon code and join me in my real estate courses linked down below, and you get to chat with me live every day. For what I'm about to show you to make sense, we've got to know this. In March, I last reported data to you from March 1st to March 26th. And I also broke that down into March 15th to March 26th to kind of see what kind of impact the end of the month was having compared to the entire month. The point of that is we're expecting to see sadder data the more time goes on. But the problem with March data is it really reflects back to the end of January and mostly February data. So expect that properties that are closing, that are selling basically on March 26th, probably actually went into escrow, like they made a contract somewhere back on February 15th, which is kind of pre-crisis. So this data isn't super great yet, but now we have new data. And this new data in the first week of April and the end of March will actually let us start seeing the potential impact of deals that are supposed to be closing here, but are canceling because of the pandemic. So the data I'm about to show you is going to cover March 27th to April 7th. And I plan to do another video once I get the data from April 7th to April 15th. And my expectation is we should continue to see sort of more sadness as time goes on, but what we really want to pay attention to is how much sadness. If we see during this range, minus 1% in prices, that's one thing. If we see in this time frame minus 10%, imagine what the next sad face is going to look like. Oh yeah, and then this to life, this just means that you should use the links down below to get your 2 free stocks with Webull when you deposit $100 and get your free quote for the life insurance that I have, which Lord and I applied for in a matter of minutes. Honestly, we were getting ready to watch a Netflix show and I'm like, Lord, we should get you life insurance. You have asthma and allergies and there's a pandemic going on. And she's like, okay, well, isn't that gonna take like an hour? I'm like, no, look, let's try to get you a quote. And I thought because she had asthma and allergies that they were going to deny her and that she wouldn't even get a quote. Oh, nope, she still got a quote like right away and I Apple paid for it. These are the areas that we're going to look at. We're going to look at Ventura County, Orange County, and LA County. That's California. We expect some of these areas to be hit hard, especially LA. Then we're going to look at Minnesota, and then we're going to look at these South to Central Florida counties. These other sets of data, by the way, were provided by real estate agents in my sales program, so a huge shout out to Ed, Chad, Kelly, and Claudio. Thank you so much for helping me. By the way, if you're an agent and you can get me data, especially in areas like New York City or Boston or some other hard-hit areas in the country, I would love your data. So please leave a comment down below or join my Discord, tag me in Discord. That's probably gonna be the best way to get me. And please send me your data. Let's get all of this on a spreadsheet because I do not wanna sit around waiting a month to get data from the National Association of Realtors. I'm gonna get myself weekly data one way or another. So here's the latest data set, and we're gonna compare March 27th to April 7th. That's the recent data set, compared to the sales between March 15th and March 27th. So again, we're expecting a downtrend. Now this here is the County of Ventura. The County of Ventura has not yet been hit hard by this outbreak, so this actually doesn't surprise me. We see prices actually almost up 1% during that time frame, more properties sold, and about 12% less days on the market. Let's compare this now to Orange and LA, which have been hit substantially hard, way harder than Ventura County by this outbreak. Here we go. Orange County. Uh-oh, look at this. Orange County and LA both down almost 2 to 3%. That's 1.84% for Orange County, 2.88% for LA. Number of sold properties down 11 to 14%, almost 15% less sales. Yet still the interesting positive note that days on the market are not going up. So it's still taking way less time to sell properties, but we're seeing less sales, potentially more cancellations in LA and Orange County, especially as a lot of people's down payments were or have been tied to the stock market. And the 27th to the 7th wasn't great for the stock market, although this week it's been pretty good. In fact, I kind of keep this running in the background. Webull has been really good. I mean, look at this. I could just sort of track what's going on here. My favorite move has always just been putting the losers up top, and the cool thing about that is if I see a good loser, I could just execute an order really fast from here. So not bad. All right, now let's see Minnesota. Minnesota is not yet a very hard hit area. Minnesota and Hennepin County has been hit. Actually, not much. We got 1.23% up in pricing. We have 36.85% more closings. That's incredible. And 14% less time to get to closings. Let's now look at the Florida region. We've got Orlando. Oh my gosh, Orlando prices over this time frame up 7.7%. That is insane. Wow, I was actually not expecting that. Now, even though Orlando's sales prices have gone up dramatically, 7% over this time frame here, the number of properties sold has gone down by 6.6%. Again, days on the market, across the board, things are selling a lot faster. We've got over here Broward County up 3%, Palm Beach County up 3.2%, and Tampa area up 1.56%. I mean, this is very, very interesting. Now, this data represents a 12-day period, so month over month, this for Orange County and LA County, the hardest hit areas of this outbreak, that's not very good. For example, if in LA County, I take 2.88% over a 12-day period and I extrapolate that over a 30-day period, I get a loss in LA of 7.2% in values over a 30-day period due to this outbreak. That's very large. If we do that to Orange County, we get a loss of 4.6%. Yet again, the areas that are not super hard hit yet, like Ventura County, Florida, Minnesota, these areas are zooming. The spring market is still booming. So it'll be very interesting to see what next week data tells us as well. But good heads up, especially if you're in some of these harder hit areas, keep an eye on what's happening to sales prices. So what are some practical implications that come out of this? Well, number one, if you are in a hard hit area, you really want to be negotiating hardcore, especially if your area gets to what they call surge week or peak week, where it's like, oh, this is gonna be the worst week ever. You strengthen your negotiations and maybe use that as an opportunity to try to score yourself a really good deal, as sellers are very fearful. My expectation is we'll see a longer term rebound in some of these prices as we flatten the curve, which on a global level has already started happening. But in terms of peak week, Orange and LA got whacked here. I'd be very curious to see what New York data is. And also keep in mind, when you're running comparable sales for these properties, if you're in a hard hit area, you gotta discount your comps. That is, properties that are in Orange County and LA right now, don't look at the comps and say, oh, this is great, everything looks like a deal. No, you gotta adjust everything down on a monthly basis here, 4.5% to 7% if you're looking at March and February comps, given this latest data here at the start of April. And remember, there's nothing like a little bit of seller panic to get out there and go get some sweet, sweet below market value deals. Now's the time to learn, get educated so you can go buy sweet, sweet deals.